ahead of the week open on Sunday, July 9th, 2023, we were expecting price to go higher. And we have this candle right here. Now, on this candlestick chart here in the lower left-hand corner, this is a daily chart of the NASDAQ. Everything that I'm teaching you here, folks, you may be primarily a Forex trader, okay? Everything that I'm teaching you right here works on every asset class. I would not do anything different. So that way, if you're frustrated because I'm not talking about Forex like I did a lot before, I'm teaching through this medium here because this is where I actually got started. In 1992, I was a commodity trader. So this is where I started. Later on in my career, I moved and transitioned to Forex. There's a lot of things that prevent me from wanting to trade Forex, so that's the reason why I'm teaching with this medium here. Everything that I'm teaching you here with futures index trading works in Forex too. It works in commodity trading. It works in gold. It works in metals. And my students, I can't swear by it because I've never traded crypto, but I have students that have been profitable trading crypto using this information. So that way, at least you know that somebody else out there other than me has some experience with it, because I don't have any experience trading crypto. So if we see this down close candle after, if you look at the weekly chart here, there's a small little fair value gap right in there. That's this one here on the daily. So the market traded higher there. And then we have this down close candle, which is right above and digging into this down close candle. This is an order block. It's bullish. This is a propulsion block. Propulsion blocks are order blocks by themselves, but the way you differentiate what they are and how they're used is this down close candle digs into a previous down close candle. So an order block that has another order block that digs into it. Propulsion blocks, you never want to see a closing price below mean threshold. Mean threshold on an order block is the 50% level. We wicked down through it, but then closed here. This one here, we wicked down through it and closed right here. We wicked down through it and closed up here. So yes, we had the movement through the mean threshold, but we didn't close below it. So that still keeps this down close candle valid as a propulsion block. I promise you we're going somewhere. Friday, Thursday, Wednesday, Tuesday, Monday's trading. All of this movement here was just returning back into this gap, this tail on this candlestick. We treat wicks and tails on candlesticks as gaps. Midpoint of that gap or tail on that candle is consequent encouragement. Extended out in time, you can see that's exactly where we were trading on Monday. It did not violate the rules that make a propulsion block invalid. Market closes here, and now we open the next day. We open, trade down, rally back up, and have an up close. So the next 2 days we had news. We had pretty good economic calendar events for the rest of the week, and it sent price parabolic above the relative equal highs. So the draw on liquidity is the weekly chart mitigation block. Okay, so we're not going to say that the actual price was 15,693, but we're just going to use it for the sake of discussion because I don't know it off the top of my head what the actual price was. I haven't noted here. You're invited to do that in your own study. Don't just take what I show and talk about in the video. You need to go in there and weigh out whether your charts show the same thing, because you want your own proof. You don't want to just take my word on anything. In fact, that's the best way to do it. Challenge yourself and challenge my observations. Was it really there in the chart? Because just taking my word for anyone else's word for anything is not something you should do, especially in investing and financial advice. So this movement here, this was fully expected. We were expecting this bullishness and higher prices on NASDAQ. We were expecting it in ES as well, E-mini S&P. But we look for things to start or instigate a price rally higher or a price decline lower. And we frame it on the basis of where are we at right now versus where is it likely to go. So if we think that the price is going to gravitate up to this area here, and we'll call it 15,693 and 0.75. If we start the week here, Monday, and then Tuesday, and Wednesday, and Thursday, and Friday, we expect each daily candle to gravitate towards that level. Even if you didn't pick that level, if you felt that this fair value gap was a reason to keep going higher, that's fine. There's nothing wrong with that. But this mitigation block is below that fair value gap. And if you were using the relative equal highs as a draw on liquidity, there's nothing wrong with that either. Remember, the only thing we're doing is primarily looking for the expansion either higher or lower on the weekly candlestick. That sets our bias for the week. So is it more likely to see where price was consolidating here? Is it more likely it's going to drop down after we've already went into this fair value gap here? We already did that. And then we consolidated here the previous week. And then we start a new week here, trade down a little bit, and then reject it, which is all that rejection is based on this consequent encroachment, this daily candle right there. That's where the low of the week was formed. So this is primed to just obviously expand higher, aggressively above these relative equal highs on the daily chart. So there's buy orders resting above that. Markets don't top like this, folks. They don't do it. And since the weekly and the daily chart are showing this pattern, it's more likely to go higher, especially since we were bearish on dollar. Not just bearish a little bit, but we were exceedingly bearish, expecting it to reach for a larger pool of sell-side liquidity. So if that is the case, that means it's definitely a risk-on scenario, meaning all assets have the likelihood to go higher. Euro, pound, gold, all other asset classes are free to move higher because it's risk on. And we saw a huge risk on event this past week where most asset classes went up while the dollar crashed.